But if you have all these items, you can secure your finance. Now it's time to talk about how to secure your financing. But in order to do that, you're going to need a deal. But there's a couple of steps involved before you even get to the deal, right? Like, before you even commit to the deal, you need a pro forma, because the pro forma is going to tell you everything. Well, it's a development, well, it's new construction, right? But whenever you want to understand how the value and everything, you got to put the pro forma together, right? The pro forma is going to, whether you're doing apartments, hotels, it's going to tell you the number of units you're renting, the number of hotel rooms you have, what's the cash flow, what's the IRR, it'll share investor returns. And then once you find that out and you're comfortable and the numbers checked out, then you can begin to ink your deal, meaning move forward in securing the deal, right? So before you secure the finance, you got to secure the deal. So how do you secure the deal? Well, the first step is the LOI. We call that letter of intent. And basically, it's a letter that's non-binding that describes how the deal is going to be structured, what's your expectation of the seller, what's the expectation of the buyer, what's the time frame to close, what's the due diligence period. I mean, it's basically like a bullet point or outline of how the deal is going to be structured. And once you have that structure in the LOI, the seller or buyer will sign off. Then you move to what they call the PSA. Now, what's PSA? Purchase sale agreement or contract. And in the purchase sale agreement, it goes into detail. Now, that will be a binding agreement. So the LOI is one of the steps that you have, but the PSA is something you have to have in order to secure the financing. Like, you go to a bank or a hedge fund or whatever, they're not going to even deal with you if you don't have a PSA. Like, they'll talk to you about the different structures and how financing and particular interest rates and terms and debt service and, you know, how they look at deals and what they want to invest in. But to move forward to the next level, you have to have the PSA purchase sale agreement. Okay, but the next thing is, when you do that, the banks want to see, you can call it a business plan, you can call it a pitch deck, executive summary. They want to understand who's in the team, the bio of the team, the projections, the goal, and the strategy of this project. Look, guys, I'm sharing with you all the things that you will need to be successful at acquiring a deal. If you have all these items, you will get your deal. Now, so we only listed about 3 of them, maybe 4. All right. But again, your executive summary, pitch deck, okay? And then the next thing is they're going to want to see cash. All right. So whatever you're signing for, they want to know if you have the net worth. Now, here's the great thing about that. If you're signing debt for $1 million, $10 million, $50 million, it doesn't matter. They want to see either you or your team has that net worth. So if you're doing $1 million deal, they want to see you have the net worth of $1 million. Now, here's the great thing. If it's 4 of you, as long as y'all have a net worth of $250,000, you can do the deal, move forward, and sign debt. Only one of you have to be worth $1 million, and everybody else can just sign the debt. That's what they call your guarantor. But they want to see that whether you're worth it or you have, well, if you have it liquid, you're going to be worth it, right? So they want to see all these things. And I know me, I was like, well, if I was worth $1 million, why do I need to borrow it? Right? But that's how it works. Okay. Then another thing, they want to check your credit. All right. Now, what's a little different is if you're dealing with a regular institutional bank, okay, they're going to be fine, you know, with the 670, 620, 670 credit score plus. If you're doing hard money and some interpret as bridge loans, they don't necessarily take credit in consideration. I mean, it is a factor, but they really looking at more of the deal. But if you go in standard ways, they still looking at your credit. But either way, it's still looking at credit because they want to look at see if you got any bankruptcy, any litigation, fines, or anything like that. And if you do, you need to have that all cleared up or a letter of approval before you move forward. The other thing is, like I said, they also want to see your equity. Now, they understand that you're going to raise, some of you guys may have your own capital. Some of you may have to raise the capital in order to do the deal. All right. You may need to do OPM, other people's money. You raise the money, and the banks understand that. If you do that in your PSA, you should put a due diligence period because you need to be able to raise that capital. Now, here's the great thing about it. Before you even get into the deal, you should have already located money. You want to locate money before you even do the deal. You want to get your commitments. And then once you get your commitments, then you move forward on doing the deal because now you can start raising capital. And then because you gave yourself enough time, if for some reason you weren't able to raise capital, guess what? You just back out of the deal, okay? We talked about liquidity, net worth, credit. Then the other documents they want to see, they're going to want to see your taxes. So if you have your W-2s or your K-1s, your 1099s, they're going to, some banks just want 2 years, some want 3 years. But these are all the documents that you need in order to do that, all right? Because they want to verify that you do have cash flow. Now, here's the great thing. Depending on the banks you got, some people use a lot of depreciation. Now, depreciation offsets your gains, but it could look like you made less or a negative, but even though you were profitable. That's the whole game. That's a whole nother story. We'll talk about that later, but even if you have depreciation in your K-1s and your W-2s, look, still submit those because banks understand that, all right? So like I said, 2-3 years experience. 2-3 years of your tax returns. In your bio, you share your experience. Then they also want to see your team, which you would explain that in your bio. Like, do you have a property manager? Do you have a hotel operator? Who has the skill set? What kind of skills that you have? Again, all those are the details that you'll sell in your bio as well. Now, other important documents that you need to have is a PFS and a schedule of REO. Now, what is that? Personal financial statement. That's a document. Now, what is a personal financial statement? It shows your liquidity. It shows any real estate you own, any debt you have. It shows life insurance policies. It shows everything. It shows your birthday date. It shows your personal residence. It even has a blend of your schedule of real estate. This is essential because, matter of fact, once you start getting into deals like this, the banks are going to require you to submit a PFS and a schedule of real estate. So they just want to see what they call your global wealth or your global real estate or basically your global economy of what you own. Like, these are essential. So we'll share with you some of those documents and what that looks like. But one of the things, the difference between the PFS, that's more of a summary of everything you own. Whereas the schedule of real estate, that goes into breaking down the name of the property, what entity it's in, the address, the debt, potential cap rate, the net equity, the NOI. I mean, it goes on with a few more documents, but that's something essential that you need. And even if you don't have that, they're going to make you fill it out. My point is, if you have all these documents that I'm describing with you, you're going to be able to get your deal done. And they're going to take you a lot more serious. But don't give them the full pro forma at that time. Only give them documents when they ask for it. But you always want to have a package together. You want to put it in the Dropbox. You want to keep all your taxes. You want to update your PFS and your schedule of real estate monthly. But if you have all these items, you can secure your finance.